and hi. We are going to discuss the answer for group project FAR570. So, this is our group members. Atina Naziha, Engku Ainur Mardia, and me, Farah Shamina. Now, we start with part A, which is operating segment. First question about what is MFRS 8. MFRS 8 is a component of an entity that engages in business activity that earns its own revenue and expenses. This is issued by MASB in July 2009 that to be complied in complete sets of published financial statement. Head Office and Research and Development Department not an operating segment because they are not directly involved in business activity. Now, we discuss about CODM, Chief of Decision Making, that responsible for allocating resources to the company's operating segment and assessing the company's performance. The CODM usually can be CEO, COO, CFO, Board Executive, and Management Committee, depends on the company as long as the person receives segment report and make operating decision. The CODM ensure management aligns with company goals. Without CODM, we cannot define properly what is operating segment under MFRS 8. First example of CODM is HIN Holdings Berhad, which is manufacture and distribute electric appliances for household and commercial use. The CODM in this company is their CEO, Mr. Adil Jimmy Mistry. His priorities include driving the company's strategy and enhance the operations of the company. As I said before, the CODM is not just individual. It can be non-individual, such as Sin Hen Chan Berhad, that primary in plantation and energy facility management. Their CODM is Board of Director because the company's key operating and strategic decisions are made collectively by the board.
Moving on to the question 3. Two types of segmental reports used in financial reporting. For this question, I'll be using Kin Holdings Berhad, a Malaysian company known for manufacturing and trading electrical home appliance as an example. The two types of segmental reports are business or operating segment report and geographical segment report. For business segment report, it shows performance based on different business activities. As example, Kin divides its business into three main segments: investment holding, trading and service, and manufacturing. This report shows the revenue, profit, and assets for each business area, helping users understand which part of the business contributes the most to the total profit. The second is geographical segment report. This one presents revenue and assets based on country or regions where the company operates. For example, Kin reported revenue of about RM296 million from Malaysia, RM156 million from Singapore, and RM47 million from the Middle East. This gives a clear picture of where their sales came from and which regions are most important to the company. Next, question 4. The benefits of segmental reporting. There are two key advantages for users of financial statements. Firstly, it helps investors identify which business drives profit. From Kin's business segment, we can see that trading and services is the largest revenue contributor, while manufacturing adds stability through exports. This helps investors assess performance and resource allocation. Secondly, it shows the company's market exposure and risk. Through the geographical report, users can see that Kin earns most of its income from Malaysia and Singapore, meaning the company is quite dependent on those markets. If the economy in this region slows down, it could affect overall performance. In short, the business segment report shows what drives profit, while the geographical segment shows where the profit came from. Together, these reports give investors a clearer understanding of the business performance, risks, and opportunities.
Next, we want to talk about interim financial reporting. Next, we move to MFRS 134, interim financial reporting. That means financial report for a period less than full financial year, such as semi-annually, quarterly, or bi-monthly. The report can be complete or condensed set of financial statement. This is important to provide investor and other user more timely with current information and also enable user to evaluate entities' financial performance with their cash flow too. Next,
let us start with the significant events. Since the end of the last annual reporting period, Axiata has undergone several important activities that impact its financial result for 2024. First, acquisition and merger in Sri Lanka on 26 June 2024. Dahlia Axiata completed the acquisition of Bharti Airtel Lanka, recognizing a goodwill of 216.8 million. Later, Dialog merger with Airtel Lanka, which increased retained earning and non-controlling interest. Second, foreign exchange effects. The group recorded foreign exchange losses of 387 million in fourth quarter, but gains of 90 million for the full year, mainly from US dollar borrowings. As per interim financial reporting standards said, companies must disclose any significant events and transactions that occur after the last annual reporting period, as this helps users understand how the company's financial position and performance have changed during the interim period. Now, let us move on to the interim reporting periods. Based on the unaudited financial statements in the report, the current interim reporting period is for the fourth quarter and the 31st December 2024, and the comparative interim period is the fourth quarter and the 31st December 2023. The table shows the reporting period for each statement. This means the current interim report covers the entire financial year of 2024, and it is compared against the same period in 2023 to show changes in performance. To conclude, Axiata's financial year in 2024 was influenced by major strategic transactions, including mergers, disposal, and debt restructuring. The group also made accounting adjustments and foreign exchange evaluations that impact its results. Overall, this action reflects Axiata's continuous effort to strengthen its regional operations, enhance financial stability, and position itself for long-term growth across Asia.
So, the conclusion for this presentation are CODM is not just for individuals such as CEO, but it also can be non-individuals such as Board of Directors and Management Committee. There are two types of segmental reports, which are Business or Operating Segment Report and Geographical Segment Report. The two benefits of segmental reporting are it helps identify key profit drivers and show companies' market exposure and risk. The interim report overviews the company's unaudited financial performance and position for the accounting period. It also highlighting the key transactions and events that occurred during the period before the release of the audited annual report. That's all from us. Thank you.